Is there any scenario, Gene, in which China would need to devalue its yuan? How much more large would the tariffs have to get before China had to do that?
The way I would look at it is to kind of look at, all the possibilities as one package. So I think, the Chinese have tried to keep this dispute as a trade-focused dispute, and I think their concern is that the U.S. is trying to wrap much more into it, so bring in Taiwan and other issues that are of strategic importance. And it's natural in that sense for China to start putting other options on the table, including the exchange rate. We think it's not so much a function of a tariff level, it's more a function of, how contentious the talks get and what other, how much, we kind of escalate up the scale in terms of broader actions.
So what tools does it have at its disposal before it even gets to devaluing the yuan? Analysts are talking about weaponizing the currency, but there's a lot that China can do before it even gets to that stage.
Yeah, I would say that weaponizing the currency is sort of a question of how much is it willing to hurt itself in order to hurt the U.S. It's not obvious that a weaker renminbi is really that consequential to the U.S. But other options that you could think of in the interim are anything from selling treasuries to even selling equities.
Does it have an external debt problem, though? Because if it sells treasuries, what does it do with the capital that it, receives the proceeds?
Yeah, so I think in the end, it is probably natural for countries that are at risk of some kind of sanction to look to alternatives relative to dollar assets. So there is an issue of what can you hold? Can you hold European assets? That's kind of a natural, focal point. But in the end, you could hold cash, you could hold hard assets, you could hold gold. There are other options.